On to the last panel of the day, titled Sustainable Finance, Investing in a Greener Future.
We would like to invite, actually our moderator is here, Püren Kolabay CFA, from CFA Society Istanbul. She's our board member and also ESG committee lead. And Carlo.
Our panelists, Carlo Farina Kaya from CERN.
Elizabeth Wisniewska, CFA from PRI.
Dr. Güzan Gülay from Borsa İstanbul.
And Mahmut Akten, CFA from Garanti BBVA. And we thank them once again for their hospitality. Thank you.
Thank you.
Yes, dear esteemed panelists, dear guests, welcome to today's Sustainable Finance panel. As Sarah mentioned, I am Püren from CFA Society Istanbul, and I'm really honored to be here among the experts in the field, actually. Today we have Mahmut Bey, again, thank you for hosting us, Güzan Bey, Elizabeth and Carlo. As I may miss some of their great achievements, I will let them introduce themselves during the questions. But as we gather here today, it is clear that the need for sustainable and responsible investment is becoming more and more pressing every day. Today, at least, we have the opportunity to hear from our panelists about their experiences and insights into climate investment, ESG integration, and responsible finance in combating climate change. Together, we will explore innovative approaches, best practices, and emerging trends in sustainable investing that can help guide us towards a greener future. So I would like to start with Elizabeth, ladies first. Elizabeth, you work for PRI, and PRI is a global initiative that works to promote responsible investment practices in the finance industry, and its signatories commit to integrate ESG factors into their investment practices. So could you please briefly explain how PRI supports investors in integrating ESG factors, and maybe also touch upon the ESG considerations in terms of importance and implementation across different asset classes like fixed income, equity, real asset, private equity, and what trends are you seeing recently?
That's great. Thank you very much. Thank you, Püren. Thank you very much for having me here. It's the first time I'm in Istanbul representing PRI. And it's been a very interesting discussion so far. And throughout the conversations earlier today, we've spoken a lot about the role of the corporates and of the governments. And I was thinking all the time, but there's also the finance bit and the money that can make it all, happen and help move the dial. And just to explain a little bit more about PRI, Principles for Responsible Investment, we are a network of investors and service providers to investors like credit rating agencies, for example. It's a UN-supported organization that was created in 2006 together with Secretary General Kofi Annan of the United Nations and a small group of committed asset owners. There was no sustainable finance regulation at the time, right? So it was really about some investors coming together to think about the responsibility in allocating capital and the importance of starting to think about sustainability considerations. So that was then. Now we are over 5,400 signatories, representing $120 trillion equivalent in assets under management, and which is about half of the institutional assets out in the market. And it goes to show that, including, by the way, 5 signatories in Turkey, the network is all over the world, and it goes to show that investors care very much about responsible investment. How they apply it very much depends on where they are at on the journey, what their beliefs, what their priorities are. But there's a common thread, which is the understanding and the belief that there are risks and opportunities that all investors should take into account. How do we work with them? We effectively provide a lot of guidance and tools for them. We don't require them necessarily to sign up to net zero, but if they do, we help them on the journey. We also run or support some collaborative engagements. So, for example, Climate Action 100, which is basically a group of lots of investors coming together to engage together with corporates, so that they can pool their resources together, and which allows also smaller investors to be heard better. And we also do a lot of bringing investors together to share best practices. I look after fixed income. And we always hear of fixed income sustainability experts who are so happy to share viewpoints with others in other companies. The sustainable investment isn't just about investing in renewables, although that's also a very important part of it. It's also about identifying what are risks and opportunities in all investments. So it's all asset classes. Even all vanilla portfolios would benefit from a bit of an analysis through an ESG lens. And if we look at the kind of differences in different asset classes, equities is kind of the obvious asset class where probably we're the most advanced on the journey. There's a lot of data available, also thanks to the work of stock exchanges, for example. There's a lot of engagement. Equity owners or holders naturally feel this link for engagement and interacting with the companies that they invest in. This said, it's not just an equity story. In fixed income, we have seen a huge uptake of the engagement. And actually, a lot of asset managers are now creating engagement teams for fixed income. And also, the really interesting thing in fixed income is that we also invest in governments. So that's a whole different engagement story there. And at PRI, we actually have launched a pilot program for engagement with sovereigns, starting with Australia last year. And I think there'll be more of that. And data is also becoming better overall, even in the murky parts of fixed income, like mortgage-backed securities, where it can be quite hard to get the underlying data, but we're kind of moving in the right direction. And in fixed income also, we have the beautiful opportunity of labeled debt, so bonds that are effectively financing specific projects relating to sustainable practices. So we've talked about green bonds earlier. We have blue bonds. We have orange bonds, which are about gender equality. So there's a lot of different colored bonds out there that help the journey. And then even in private markets, actually, the responsible investment practices are pretty advanced. If you think about it, if you're an infrastructure investor, you've probably thought about the physical risks in the area where you're investing in the infrastructure. So that is an area that's quite advanced, and actually Carlo is our private market expert, so I don't want to steal his thunder. But lastly, regarding the trends, sort of key, what's going on now in investment space, I would say one is climate is where it all started, but now there's a lot of other topics like nature, biodiversity, and also human rights, where investors are creating policies around that. Also, there's a lot more focus on outcomes. So we've mentioned the SDGs, Sustainable Development Goals, Paris Alignment. Investors are starting to think a lot more, or continuing to think a lot more about how do I put my money to work in order to achieve a certain outcome at the end of it. And then one of my favorite topics is adaptation and resilience, where the market has focused a lot on mitigation. How do we make sure that we emit less? But the horses have bolted out of the stable. We know that the emissions are out there, causing trouble. How are we going to adapt to it? And it's something that is great, because if we think about engaging with corporates, it's one thing to tell them, shall we work together to make a better future? But it's another one to ask the CFO, have you thought about the risk of floods or droughts, with regards to a factory you're about to construct, for example? And also the topics of transition and how to go from brown to green is ever prevailing. So these are the key trends.
Thank you so much. It was a great summary, and I will definitely look up the orange bonds and the other colored bonds. Gülsan Bey, I want to turn to you. Borsa Istanbul has a leading role in promoting sustainability in finance. There are some initiatives like Borsa Istanbul Sustainability Guide for Companies, BIST Sustainability Index, and also some international collaborations. So could you please briefly explain how Borsa Istanbul promotes and supports sustainable finance initiatives among the listed companies and market participants? And also, how does Borsa engage with the stakeholders to encourage ESG disclosure and transparency, and what impact has this engagement had in that sense?
Well, thank you very much, Piran Hanım. First of all, I would like to thank to CFA Istanbul Society for their valuable conference that just gives us the opportunity to share our experiences and our insights about the sustainability with you all. And also to our valuable member, Garanti Bank, for their hospitality and for their hosting this valuable event. So I think I have to also just mention about myself. a little bit?
Yes, please.
Okay. Well, I'm in the business for like more than 30 years. Not a young guy, one of the dinosaurs in this area. So I have been in many areas in Borsa Istanbul, like the equity market, bonds and bills market, development, business and product development, and I'm now serving as a executive vice president in the exchange. I'm also responsible from the sustainability with my team there, valuable team. Thank you. And we are trying to apply all the new and effective things that are being done in the international markets for the sustainability in the equity markets and also in the capital markets especially. Plus, we are also trying to have some sustainability policies in the precious metals also in our exchange. So, and let me just give you the idea, also the policy that as Borsa Istanbul we are trying to adopt. So first of all, we are trying to be an example to all of our clients, members, and the sector. And we are trying to have the sustainability products and services as effective as they can be. And also we are collaborating and raise the awareness by having relations with the international associations and also the exchanges and all the companies. So as Püran Hanım has said, we have lots of activities on the sustainability. So first of all, as we said, we are trying to be an example on that area. So what we do, first of all, we started with our premises, with our campuses. So we are trying to have the eco-friendly premises to be an example. So we have more than 1,300 trees in our campus, and we are trying to have the ecosystem, sustainable system there, so that we should just be a green campus in our premises. Also, we have a solar power plant, which we are trying to have the production of the electricity more than our own company, Borsa Istanbul, plus the group companies like Takas Bank and Central Depository. So we are also having electric cars, you know, that famous TOG car, the Turkish brand. Mm-hmm. I really advise. Mm-hmm. Then what we do, we also have the some recycling of the water, or having some filters for the tap water, so that we are trying to minimize the waste product that we are just having from the daily life. And also what we do, we are just applying a financial literacy programs for the university students, like BIS course. We also have the BIS labs, which are laboratories for the university students. And also, as Borsa Istanbul, we are supporting the national education. We have already built more than 450 physically built up schools, and we still do have some finance for the more and more schools and laboratories and all the playing grounds for the schools. So, and we also have the non-financial reporting since 2014 and integrated reporting since 2017. And these are also applied to our companies that are traded in the Borsa Istanbul. And we also have the indexes, and which are also produce for our companies. And the gender diversity is one of the most important things for us in this sustainability world. And so we have the articles of association which are modified as having at least one member of the board as an independent member, as a female, and also we are proud of our chairperson, who is a very valuable professor, Elisha Arıcan, in our board of directors. So what we do, we also have the international cooperation with lots of associations and also some working groups, like the Sustainability Working Group of the United Nations, World Federation of Exchanges, and also United Nations Sustainable Stock Exchanges Initiative, OIC Exchanges Forum, also Derivatives Exchanges Sustainability Initiative. National partnerships and trainings are also in the scope, and we are trying to have the platforms to be more and more effective and have some project groups, working groups, International Integrated Reporting Council, which are we are having supporting the integrated reporting in Turkey, and so also training and awareness is very important for us. We are having ESG training for our companies traded in Borsa Istanbul, and we also published the sustainability guide for companies, which we do have them for the indexes and everything. So maybe I would just mention about the indexes and what we have as indexes in the later question, maybe. So not to take the time too much. Thank you very much.
Thank you so much. It seems like Borsa Istanbul approaches the sustainability from a variety of angles. Thanks for the presentation.
You're welcome.
So Mahmut Bey, I would like to turn to you. We're talking about net zero emissions by 2050, and it is evident that the urgency of this need not only requires a bold vision, but also some action. So the transition to a net zero economy presents a monumental challenge, this is true, but it also brings a critical need for financing on a massive scale to drive the investments into sustainable infrastructure, technology, innovation. And we are starting to see the effects of the climate change already, so it's becoming more and more important every day. Here, how much financing size are we talking about, and how do you think this financing gap can be closed?
I wish you had an easy question. In a world, first of all, thank you very much for being here. It's great to host all of you here in our headquarters. Sustainable finance is close to our heart. But it's a very difficult question at the end, even when you are not able to. I have some global market guys here. We are having difficulties to forecast what's the Fed interest rate at the end of the year,
True.
and then you're asking about financing for the next 30 years to get our net zero. But let's think about the scope of it. It's very difficult to even define the scope of investment, but in the earlier panelist, Özlem, I think, from Beko mentioned that don't look up, right? But we are looking up, especially the last few years. And danger is there. Last year was the warmest or hottest year in the record, right? So this implies other things like water scarcity. I think Elizabeth mentioned about it. So there is need beyond investment, beyond just decarbonization. What I mean by this, for instance, you follow the situation in United Arab Emirates a few weeks ago, right? It has cost when you try to reverse the effects of water scarcity. And when you look at our country, for instance, the water leakage in infrastructure, our water distribution to home, to farms, we have 40% leakage. There's a need for investment, right? When you go to some of the Northern Europe countries, it's 5%, the European average 25%. So how can you invest and reverse those things? How do you define the sustainable finance scope? That's the reason there are ballpark numbers. I mean, everybody's referring to some numbers, especially driven by coal type of fuel replacement, renewables, green hydrogen, and others transition. And as I said, it's very difficult to estimate what's the total number, but the numbers are referred to be about $200 trillion for the world economy until 2050. Whether it's 200 or $300 trillion is a lot of money. It doesn't matter. and we are only 1% of that GDP for our country, is huge, right? $2 or $3 trillion means we need to invest quite a bit in the next 10 years to get there, which is $1.5 trillion in the next 10 years. Do we have $1.5 trillion to invest? And how do we do it? It's very difficult. But I'm optimistic because, again, in earlier discussions, everybody referred to how investors are sensitive to this topic, and they're asking about it. So there might be ways of closing this financing gap. But at the end of the day, we know decarbonization is needed, but we are not able to do it, right? Like many irrational behavior we have in our world, there is wars, right? It's completely irrational. But at the same time, we need to invest in decarbonization. Why don't we do it? There are many stakeholders, like everybody is trying to help each other. Yes, there is a collaboration, but decarbonization is not the only factor that enable us to invest. It has to be economically sensible, meaningful. And for that, we need innovation. It has to be safe and secure. It has to create long-term competitiveness as well. If not, how much you can pass this cost to end customer? We all say we want sustainable life and future for our kids and for ourselves, but at the end, how much premium can you pay? Is there anybody who can say they're going to pay 50% or 100% more to every product in this audience? I don't know. I mean, most of the surveys says 10 to 20% people are willing to pay, not everybody. And that's important. So how do we actually transition with innovation coming, gradually? How do we do this? We need to find ways of new financing models, right? And there are examples of it where it works very well. I'll give one example. In our country and in some countries, these renewable energy investments start to make substantial sense. But then still, we are not able to go as fast as we need to in the past. And in our country, in some others as well, we have feed-in tariffs. And this is where we get into financing. Feed-in tariffs takes us the commercial risk completely out of the picture. Because as you know, spot electricity prices changes every moment, right? Every day. And then as a bank, if we finance typically 80-90% of the investment, we like to make sure that every year it's paid, right? And we know that it's going to be paid at the end of 10 years. But every year cash flow should be positive. For that reason, for instance, I think very, very rightfully, Turkey did have a model sponsored by government as fixed rate for every year. That feed-in tariff takes the variance completely out of the picture. So investment makes sense for us to finance as well. And this speed up the investment in renewables in the country as well, in Turkey. And this is great because with the investment increasing, at the end what we did, we innovate. Turkish companies start to produce solar panel, not just assembling it. And then we start to produce chemicals and other parts for the wind power as well. And these reduce the cost of investment of 1 megawatt only 3 years ago from $1 million to 600 even below right now. So there isn't any variable cost almost to run a solar panel farm. And then CapEx coming down, it becomes very sensible, very meaningful. And this ties to also being competitive, right? And as usual, China, for instance, is a good example of investing in renewables, making other sectors competitive because you use renewable energy in mobility as well as green hydrogen and other places. Last year, China invested 200 plus gigawatt in solar panel alone, more than the rest of the world. And that's huge. And 2/3 of batteries, EVs produced in China, and most of the mining materials, lithium, for instance, things like that. And then we talk about trade wars and everything else. And then China will continue to produce power a lot less than US. which makes them competitive in steel, cement, in many sectors where the electricity is used pretty much everywhere. We are trying to electrify. So for every country, it is important how we transition to increase our electrification, increase our renewable. I think Turkey is in a good path right now because of the local production. We speed up. And then how can you convert this to green hydrogen and other infrastructure so that you could be competitive? Competitiveness is one part. And I also mentioned about demand, right? Anything else? There's a part customers willing to pay. In B2B, it's a bit easier. For instance, you probably have heard Porsche has, paying one of our BBVA customer for green steel, 20-30% premium. Or our ministry, for instance, lately for tender offers for construction, for green cement, for instance, they are incentivizing green cement, which is basically is easier. You reduce your clinker factor, alternative raw materials, and you reduce at least your emissions. Those are the things we need to do to basically make this model work. Basically, reduce costs, not just decarbonization, somehow reduce costs, providing the right financing model to do so, and then where we can be competitive, continue to invest in those areas innovatively.
Yes. Thank you so much. I know this was not an easy question to answer, but thanks for the points about competitiveness and demand. Carla, I would like to turn to you. As you may know, Alper mentioned in his opening speech, actually, CFA designation, CFA Institute has some specialized certificates, including ESG investing exam, which equips you with the necessary knowledge in the field. And Kaya is a designation for the alternative investment field in itself. So could you please briefly explain the areas that it covers, and also how does Kaya approach to sustainability and ESG differ from traditional approaches, and also maybe are there any specific methodologies or frameworks that you use to evaluate the ESG factors?
Yes, thank you for your question. First of all, thanks for having me. My first time in Turkey, and I usually go to events that there are two kinds of people, sell side, buy side. So here instead I found really interesting lots of people from different walks of life of society that have at their heart, as you say, the decarbonization. It is so interesting that we are not alone. So thanks again.
Thank you.
To your question about Kaya, that I'm here to talk on their behalf. It's a Chartered Alternative Investment Analyst Association. So it's a professional body focused on alternative investment. So they have a series of certification where you specialize on alternative, as the word may suggest, in opposition to traditional investment as a listed equity, fixed income. So you have an exam like the one I have, that are two exams where you focused on hedge fund, real estate, private equity, how to measure strategy, capture performance, etc. More important, to come slowly to your interesting point, Kaya, because of alternative investing, believes in long-termism. So we believe that the investor cannot always capture the market. So you need a multi-cycle, patient, long-term approach, which would help you to better serve shareholders, that one of the main objectives, but also other important stakeholders that we mentioned before, like society, environmental, etc. Other important point of Kaya, so the role of alternatives, alternative investments are by definition less exposed to regulations or more opaque, so it's still relatively easier for the knowledge investor to profit from price inefficiencies. In alternative investment, the typical investor, imagine LP in a private equity, has a much in-depth knowledge on the underlying assets. Typically, a private equity, you have 10, 12 investments, with 5, 7 investors who have the majority. So the knowledge and also the alignment of capital structured interest, because the GP has a skin in the game. So they take also the fees based on the performance, could bring to for us added value, economically speaking, and also for ESG. You mentioned before, I think was found interesting, the huge amount of financing. Financing is always an important part, but also what kind of finance? Typically, if we all believe, and I guess we are here is the case, we should go to a net zero decarbonization. we need a lot of green economy and greening the economy. How do we green the economy? Lots of new economy and structure that are typically funded by at seed level, so venture capital, private equity. So you have, imagine, carbon storage, batteries, other kind of clean energy. Typically, you would find typically this kind of structure and kind of investor who understand different risk-return profile. It's difficult to have an exposure to listed equity to green hydrogen. Find a company where it's very, very difficult. So this is the first point. Another so this is the first point. Another element of the important where private market play a key role, for example, is the real estate. In Europe, 70-80% of people live in cities, okay? And 80%, if not 90%, of our buildings in Europe are not green. And they will stay with us till 2050 and beyond that. So we need lots of investment to make men greener. Investment that, for example, saving lights, using more natural material, recycling water, etc. So it's a huge amount of capital for a lot of time where the return is not tomorrow, long-termism. Here comes private capital. So we believe that private capital are key for a real impact for a net zero. Here's the role of Kaya that provides in-depth knowledge, because this kind of investment requires in-depth knowledge for understanding the kind of risk return you are taking, no matter the CFA to hedge fund, private equity, or real asset.
Yes, thank you. Long-term approach is really important, as
Always.
you say. Yes. So Gülsan Bey, I would like to come back to you actually. We know the importance of a top-to-bottom approach to promote ESG and sustainability. So how does Borsa Istanbul integrate ESG criteria into its listing requirements and overall market operations? And also, in what ways does Borsa support investors in accessing the ESG-related information to make informed decisions? And maybe if there's any like a success story that shows this positive outcome.
Well, thank you very much again. Is it possible to have the presentation again? Okay. Well, let me just start with what we do as the indexes, which is a kind of evaluation and calibration of the sustainability in the capital markets. So, if you would just have the see our journey there. Let me just go there. Yes. As I said before, we had some other activities, but the BIS Corporate Governance Index, which was one of the measures for the governance and the sustainability of the indexes, all the companies, has just been started to calculate it in 2007. So, and in time, we have just tried to have this indexing and calibrating of the firms in the sustainability to a better position. So what we have done, we have just for calculating the indexes. For example, last year, we had just been calculating that sustainability index since 2014, and what we have done, we have just changed our calculating company, which is responsible from the index. So we changed to, I don't see any problems to pronounce it, so it is the Refinitiv that we are just using now, and we have just changed from IRIS to Refinitiv, and what we have done by changing that index methodology, we have just made the index and the evaluations more visible and more, in a way, sustainable from the evaluation point, because it's an open source, so you can just go and just check what is the situation there. You can just check what is going on there. And as a company, you can always have the evaluations going on all the time, so that, and we just let the companies to be able to joining to the index whenever they are eligible. So, and when they are not, we are immediately taking them out, so that this would just gives more trustfulness and the more accuracy for our index. So whoever is in the index, so it is obvious that they are qualifying as a sustainable company. So also we have just initiated the Sustainability 25 Index in 2022, and last year in 2023 we had the features on these indexes, so that we would just try to give more and more products and more capabilities for the companies to invest on sustainability and have the importance more and more in their daily lives. So this year we have more sub-indexes, and for example we do have some other indexes, like for example you can see on the right hand side the new sustainability indices, which is one of them is Guarantee BBVA's climate index. That are the companies that report their risks and opportunities regarding climate change according to the CDP methodology. And we do also have the Women at Business Index, Clean Energy Index, and these are the special indexes that we calculate for our members, for our clients, and so that we would just try to promote the indexing on the sustainability also. So, and we are open to any other, maybe some CFA index about the sustainability. Let's make you our client also.
Why not?
Why not?
Take your word for it.
Yeah, okay, why not? So, as I said, the sustainability index from 2014, changing all the collaboration with Refinitiv, and then new sustainability indexes all the time. When you also look at to the guidance, what we are doing for the sector also, we are just trying to issue the best practices with some reporting and disclosure guidances, like sustainability reporting in 2020, integrated reporting guide in 2022, and climate reporting guide. And all of our colleagues, as I said, they're all always trying to renew and have the guides to be much more updated, and all the time they're trying to have new and effective reporting there. So maybe we should just also mention about the some transformation programs also. So these corporate transformation programs, some other educational programs also on the for the companies that are traded in the Borsa Istanbul to be able to go into these indexes, what to do and how to do, is also one of our duties and what we are doing there. And so this is something that we are trying to facilitate and also collaborate all the time with the other companies.
Thank you. Thank you so much for the summary. And it's really clear that increasing the quality and variety of indices will push the corporates to do more sustainable activities and practices.
Exactly. That's our target.
So Mahmut Bey, I would like to come back to you. From green bonds to climate funds to impact investing, there are different tools and approaches available to drive investment into climate solutions. So first of all, what kind of sustainability-oriented policies do we see recently in Turkey and in nearby geographies? And as another point, financing sustainability is a very important opportunity for all stakeholders. How do you think banks and the real sector view this issue? And as a bank yourself, what do you focus on this area?
First of all, when we talk about Turkey, we are talking about our close relationship and we are near shore to Europe. So European policies is very important for us. And then 2019 commitment for the continent to be carbon neutral is an important part of it. And in 2021, they had 225 policies published. So those are relevant for us. And we, especially for certain sectors like steel, cement, the export to the region is substantial. About $10 billion is 42% of their export. So it's very relevant, those policies. And one of the first things for me, which some deferral, right? CBAM is important. The taxation, carbon taxation at the border is very relevant for us, for these industries. As you know, we have certain taxes when we export to US. The US is a bit more relaxed about these, but Europe is very rigid. And 2026 is very close, right? So for that reason, these sectors needs to invest in reducing their emission. And along these lines, also Minister published a commitment to have our own ETS for the later this year, which is very important. So some of these taxes remain in the country, but also create a fund to help these sectors to invest in technologies, not just renewable, but transition. For us, the transition finance is as important as green finance. For that reason, we are looking for those policies and it's a very, very good capitalistic system. At the end, we talked about how the feed-in system for renewable was contributing to the investment. This ETS system will help us as well. If you look at Europe, for instance, they have more than 40 billion euros sum up in their innovation fund. Recently in COP28, I come across, for instance, from Greece, Titan Cement, who got funds from this innovation fund and invest in carbon capture, for instance. These are all good investments, because otherwise, as we mentioned, if you are not getting the required return, you need this type of support, and there's a good system in place which will affect us as well. But beyond that, when we talk to our clients, especially 5-6 high emission sectors, we see that this is on top of their agenda. In stock exchange, you see as well many of them coming across and providing their commitments for net zero commitments and years. But also they are starting to put on their strategic plan the investment as well. And in even tough sectors, 50+% of the CEOs we talk to, they have plans in the next 3-5 years doing significant investments. Some of the sectors, as we talked about it, innovation and the winning technology is not very clear, so they are doing step by step. Very clear electrification of the furnaces, things like that they do right away. Maybe carbon capture is a bit later, or hydrogen, they are setting up their investments such that they can adapt to green hydrogen if they want to later. So some of these investments, if you plan accordingly in the first day, and we care about our financing plan as well, we look at it when we finance projects, whether it could be adaptable to coming technologies. So we see that a lot of interest in that area. But not everything is about transitioning of the sectors, but we also, when we talk about sustainable finance investments, we need to talk about also infrastructure, grid systems. These investments are very important. That's the reason private sectors, banks, everybody needs to come together. If you increase renewables, electrification, mobility, and the sectors coming together, and you start to pull so much electricity from the grid, your system will fail. So you need to invest in those areas as well. That's part of the plan. From BBVA perspective and from Garanti BBVA perspective, we had commitments for 2018 to 2025, which was originally 100 billion euros. It went up to 300 billion euros. For us as well, we started at a lower number, but we almost doubled. Now our target is 400 billion. Every year we pretty much double the amount we do previous year. Last year we did more than 70 billion. And we do this with the BBVA standards, right? That's also important. What counts as sustainable finance, what doesn't count? So completely we go with their procedure and approach. And then on top of that, one thing is clear: we are bankers. Although I come from the sectors as well and did consulting, I don't know clean tech very well. Probably none of us very well. There are good investors, private equities, and venture capitalists. So BBVA took the approach, not just one part of clean tech, circular economy, and all of that. We started to invest in funds. Initially, we invest more than $100 million, euros, which is through 6 different funds, more than 200 companies. And typically, those investments are not at the idea level. There is a bit commercialization. Why do we do this? We believe we can bring 2 things, 2 valuable insight to our customers as well as to ourselves. One is to learn which technology at what stage, and sometimes connect with our customers as well. And then second, from our perspective, to manage risks. Banking is all about managing risk at the end of the day. We manage interest rate risk. If you don't do, we saw in US how the interest rate duration risks is messed up the bank and went bankrupt. So from clean tech investment or this transition is very important for us as well. We talked about tax, other things. If a company is not investing, is not transitioning, then later when we extend 10 years loan, for instance, in the 8th, 9th, 10th year, it might have commercial problems. So it's in our incentive as well. And then on top, as a bank, what we do is we bring the expertise of other geographies. We do this banking, corporate banking, in more than 20 countries. So in the same sector, there is always another client who is doing investment in sustainable finance. So it's always a privilege to connect the clients to actually transfer knowledge to each other. But clean tech is an important area. We learn a lot, and that's the way we actually try to support our targets. It's not like blockchain. We understand a bit. We think we understand a bit, but clean tech, I mean, many different technologies.
Different world.
We don't have any clue.
Yes.
So we are trying to be close.
I feel you here. So
Thank you.
Thank you so much. As you say, managing risk is crucial for the banks and for the whole industry, and also time is ticking to reduce the emissions, as you mentioned, but at least we are glad to hear that high emitting corporates are putting this on high level agenda.
They are.
So, Carla, I would like to ask my other question to you. When we compare the public markets to private markets where data is less readily available, can you discuss the challenges and opportunities that arise from integrating ESG terminology into investment practices? And also maybe discuss a little about the new accounting techniques like impact accounting, and how does it help the investors to differentiate between companies that are really committed to ESG integration versus the ones that may be engaging in some greenwashing issues?
Definitely. Thanks for this question. I think it's over the last decade we have had a lot of interest in responsible investment, particularly impact that you mentioned, and this is good because it brought a lot of new practice, interest. On the other hand, introduced new terminology in our lexicon that has been stretched, misunderstood, and excellent example is impact. So, and I think the CFA has done a very good job to work with other institutions. I might be also PRI, I guess, to write a sort of important guide. And for impact, for example, a word that I find quoted abused, everyone is impact, is defined as the intention, I like the intention, to deliver measurable, positive, social, environmental result alongside the financial return. So you need to have the intention to do it, must be measurable, ex ante, ex post, must be positive, and it's not philanthropy. So you need to offer a financial return. For that, for example, first important point of mind, or I don't want to be too long, other definition like ESG factors, etc. The main issue always in impact is how we measure, how we can ensure that what is promised is done and to what extent. And there's been lots of trying to solve this issue. I think one is interesting, despite its tone, is the impact weighting accounting. That if you need to summarize, they bring externalities into accounting. So they offer, alongside the financial results that has been for us for many decades, the monetary, so in the currency language, impact accounting of society and environmental. And this has been, it's not something new, but in the past we had some KPI, tons of CO2, water. Now we have something that has comparable to financial statement because it's expressed in dollar value. It's actionable. You might say, I'm not happy with what the result you have been. So we have gone beyond the growing recognition that a company must not only provide financial results, but also respond to stakeholders. You asked me about the benefit. There are important benefits. The first is, as I said, quantify this holistic approach, right? Because if I tell you my company has reduced the CO2, has provided 300 hours of training, and our water consumption is 100 liters. Good, bad, in the end, how does it impact? Now with this approach, we can have something expressed in dollar that you can put into your accounting framework and draw your own conclusion. Second, introduce a standardization, because we have an environmental profit and loss that gives you the value and the price of this impact. So you could, this is most important for companies that are multinationals, so you can see a company now that has a branch in the US, etc., so allows you to have something standardized. Third point, measuring impact. These allow you really to see what has been the impact, etc. And the fourth point, coming to your, I believe that this higher level of transparency is an excellent form of defending or responding to greenwashing. When you see expressed in a uniform, standardized way your impact, I think that's, and it's transparent all along the value chain, what is your impact, might also help the company to guarantee their social license, as we say, and also probably, if one day we have, imagine, a carbon tax, you can save on that because you can show your limited impact. So can have a lots of impact also from a risk point of view, as you mentioned. So there are lots of benefits that this new system, of course, at their dawn, it's under, there is an IFVI that started the Harvard Business University. They moved to this association that has provided lots of data points, but it's already possible. I saw, for example, without naming big beverage companies, that because of the inefficiency of water consumption, the EBITDA will be much more.
That would be my question. Is it already applicable? And the other question is it like complementary to the like traditional accounting, or?
Well, it's applicable because there are a lot of methodology for the sector. There are, you can apply, of course, there's no legal enforcement in the sense that no listed company is obliged to, but if there are some company, there is an association and I guess Worldwide Bench Alliance that does this, so you can start having an idea, compare the standard balance sheet with the this environmental or even social, because they also judge, for example, they say, okay, I pay salaries to you, so you give your time, because there are 6 kinds of capital. One is time, you give up your time. In the end, you have a salary, which is a good thing. I also provide you training, which should be positively impacted, and also the safety of your job. So there is always a back and forth for this kind of 6 kinds of capital, manufacturing, social, etc., which makes more allow you to better draw a line. And mostly, as I said, it's expressed in value terms, so dollars, which is easier to compare, to draw a line, etc. So interesting.
Yeah, thank you so much. Thank you for your insights, actually. So Elizabeth, for the last question, I would like to come back to you. Sorry for the waiting. So as the global climate crisis accelerates every day, there's an urgency for the organizations to adapt and mitigate their environmental impact. And here, transition finance plays a crucial role to support the shift. Could you maybe discuss about the challenges and opportunities surrounding the transition finance environment, also maybe in the context of brown economies, and how PRI is working with organizations to facilitate the shift?
Yeah, absolutely. And I think it ties in a lot with what Mahmoud was saying before. I think there's going to be a lot more assets from investors that are going to be available to finance the transition. And also I think investors are going to be a lot more sophisticated and asking for more when it comes to judging the quality of the transition. And the reason why is because investors have become very, very good at portfolio decarbonization. Like everyone, they've been spending a lot of time figuring out how to measure the emissions in their portfolios, and now they can demonstrate that the emissions in their portfolios are lower than the benchmark. They've also been looking at alternative indices, maybe with lower emitting names. Quant teams produce amazing models where you optimize the emissions in order to reduce them. However, the key is that portfolio decarbonization doesn't decarbonize the planet. And I think this is something that has been underlooked by investors and is coming a lot more to the forefront. At the end of the day, if you give a portfolio manager a global equity portfolio, they can decarbonizing like that by selling all the cement names. And so what? We're still in a cement building. There's steel involved. I flew here with an airplane, Turkish Airlines, very nice. But at the end of the day, I think that there's a bit of a disconnect there between what investors have been doing so far, which has been great, but also really thinking about the real impact. There are some debates out there at the moment about whether investors should get out of fossil fuels and oil and gas companies. And again, it's like, how did you get to work in the morning? Are fossil fuels still there today? Yes. So if you disinvest completely, you lose the voice. And investors are really ramping up their engagement policies and thinking about how they engage with fossil fuel companies, governments, even industrial companies. At the end of the day, dairy companies will start producing alternative dairy because investors are also supportive and they see consumers showing less demand for milk products, etc., etc. So where is it that investors can really sort of move the dial in the future? So one is help the journey of understanding better corporate transition plans. There's a whole kind of new area of production of transition plans by companies. If they want to issue something like a sustainability-linked debt, sustainability-linked bond, they will need to demonstrate that they have a credible transition plan because the payment of that bond will be tied to some transition KPIs typically. Also, there's going to be more and more transition products being launched, so transition funds, so equity funds or bond funds, where it's okay if emissions are higher now, but there is a plan and there is a clear, credible plan for working with the companies to remove them. And I think a lot of the asset owners now are kind of rethinking how they think about that. So it's not just about the emissions today, but it's also allowing some investments in higher emitting companies in order to sort of travel down the decarbonization path. So that is I'm quite hopeful that we're moving in the right direction there.
Okay, yeah, great. Thank you so much for the explanation. So I think we are out of time already, but I don't know if we can get any questions from the audience, if there are any. If not, that was a great discussion. Thank you so much. I would like to thank my panelists again, and thank you all for coming and listening. Thanks. Thank you so much.
Thank you.
Thank you.
Huge thank you to our panelists for their valuable insights.
Yes, so we made it today. Please applaud yourselves, our panelists, and also organizers for making great today. Thank you for coming. Hope to make it for the next time. Have a good evening.